having weighed the economy's steady march toward full employment against the backdrop of weak inflation and wage growth and turbulence overseas. The US Central Bank will issue its latest rate decision at the end of a two-day policy meeting around 8 p.m. South African time. A rate hike would be the first in the United States in nearly a decade. Fed watchers, however, see the outcome as a toss-up. Yellen has consistently stated her desire to see workers reap more benefits from the recovery. Also in the mix, weak price rises and a variety of global risks. In addition to the release of the policy statement this evening, Fed policymakers will also issue a fresh set of economic projections. Well, joining me now is Owen Nkomo. He's from Nkunzi Investments. Thank you very much for joining us, as usual, Owen.
Thank you for having me, Nafu.
Now, the Federal Reserve is going to make a decision tonight. Some have said, can't they just get on with it and start raising interest rates for the sake of certainty? What do you think?
No, I think that would be a bad reason for increasing interest rates. I believe that if you look at the world in the past month or two, you've seen how the global markets have reacted to any uncertainty around monetary policy. The surprise change in the policies in China, you saw the negative impact it had on emerging markets. It just would come at a time when the world actually needs more confidence that central banks will continue to support the systems. The US is in a bit of a quandary because their economy is the only one that seems to be doing really well. If you're not talking, the frontier markets, where those markets are growing at 10% GDP. Otherwise, the developed markets and China are starting to see pressure coming through on their GDPs. And only the US is doing well at this stage. So we worry that if an interest rate increase were to happen in the US, you would see the dollar strengthen, which resultantly would negatively impact the US.
Now, what about emerging market currencies? If the US Fed does increase rates this evening, how's the market going to react tomorrow?
Definitely, we can expect that it's not even tomorrow. It'll be tonight. Remember, the currencies trade 24 hours. So if the interest rates are increased today, you can expect that people will start pricing in weaker emerging markets currencies. We'll buy the rand probably somewhere around 21.50 to the pound, if not worse. And against the dollar, we'll continue to see some more weakness. And what will happen is that the dollar will pick up ground against its major trading currencies like the euro and the pound. And obviously that will, force the markets to obviously price that in. And I think that the result will be negative for global markets. Emerging markets currencies, they'll definitely weaken.
Now, next week, our very own Reserve Bank needs to take a decision on interest rates. To what extent will the decision in Washington tonight impact the decision in Pretoria next week?
I don't think it'll have an impact in the broader sense, because Governor Kganyago has said that we make our decisions based on what we are seeing happening here at home. He's definitely going to be under pressure. Some of the things he needs to consider is the fact that the rand has weakened significantly from the last time when he gave his rate decision. And I think so we've got a backdrop of potentially inflation down the line picking up. But at this stage, inflation doesn't seem to be a concern. So I think potentially he will lean most probably towards keeping the interest rates unchanged at this stage. We still have a lot of leeway, in my view, to accommodate lower interest rates, especially looking at the inflation side of the equation, where we're not seeing a lot of inflation push upside, even with the currency continuing to weaken north of 13% from the beginning of the year. So I think those are some of the elements that the governor will need to be considering. But like the last time, he did surprise some of us and popped up interest rates. But what I think will happen is that we'll have a big or a long lag time between the next interest rate, which I believe will be the sequence as well in the US. If we do get an interest rate increase in the US today, I don't think we'll see another one next month or in the next 3 months. There'll be a big lag time before another interest rate pops up.
Big Bank, UBS or USB, I always mix
USB.
up. Yes, they expect the oil price to hit $20 a barrel. Now, if we get anywhere near that scenario, is that likely to give us a little bit of leeway in terms of inflation going forward?
Yes, definitely it would. I mean, we're big importers of oil, obviously, which are impacts on the prices of energy, impacts on the price of fuel that we buy in the fuel stations. So if by any chance their call is right for 20, which I don't think is going to happen, Nombu, I think that in the past couple of weeks we have seen OPEC and the other people involved in extracting oil and selling it, the IEA, starting to say they are starting to see now a reduction in the glut in the oil. And there's been conversations around look, we will not let the price of oil continue to trickle down to levels where the Gulf countries and the other producers stop being profitable. I do think they have an interest in controlling how far the price of oil goes. Remember that their fight has been against these guys that do fracking and the shale gas people. So those guys have I think there's a certain price where it works to allow the price of oil to continue to fall. But taking it down to 20, I think the exporters are going to have done something about that way before the oil price can get to 20.
We know that the economy is not in a good shape. It contracted in the second quarter by 1.3%.
Yep.
What's your expectation for the rest of the year?
Look, I expect things to remain to be tough, Nombu. Think about it this way. Our biggest trading partner at the moment, especially on the mining side, where we've been extracting stuff from the ground and selling it overseas, has been China. So now China is starting to slow down, and talk is that we will see GDP readings in China start to come below 7%. People are sitting on stockpiles of raw materials that they can't sell to China anymore. So I do think that with China slowing down, there's no way we can expect to see any acceleration in our growth at this stage. I think we'll probably be talking about starting to see acceleration maybe 2 years down the line, really, because at this stage there's no big push. If the US continues to recover and the quantitative easing we see in Europe starts to work positively, I think then maybe we will start to have a chance once the US reflects a full-blown recovery in the economy, when more jobs, when the guys see more reduction in the unemployment rate, and maybe they start considering hiring from outside the US. And once growth in Europe comes back to a satisfactory level, and once the decline in China's growth reaches some sort of plateau on the opposite side of the curve, I think that you will see maybe South Africa's hopes of getting better in terms of the GDP improve. I think the government has a lot of thinking to do.
Thanks very much, Owen. It's always nice to have a little bit of a silver lining because it does look rather negative. That was Owen Nkomo. He's from Inkunzi Investments.